Jim Juback, and welcome to my first YouTube video of 2023 for January 4th, Wednesday. As I say, we've made it to 2023. It seemed kind of dicey a couple points during 2022 in terms of the stock market, not existentially. But what we're going to talk about today, oddly enough, is the fact that everybody, well, not everybody, the topic could be today is everybody, well, almost everybody hates 2023. And that's what I'm going to talk about today. If you like this video, please give us a thumbs up, like it, subscribe to my YouTube channel. That way you get notification when we're doing the next one. We do about 3 a week, but not always the same day. If you like this and you want to see more, you can go to my free site, that's jubackpicks.com. Or if you want more, you go to my paid site, that's jubackam.com, and addresses to that are down below. Okay, as I said, everybody almost hates 2023. This is actually, well, good news, because we're in the process of forming a bottom here in the market, and we're not there yet. When we get to the point where I can take out that almost and say everybody hates 2023, then I think we're near that bottom. We're at that bottom, and I would say, invest. I think we're about 6 months away from that. But let's look at some of the, hey, we're only 4 days into 2023, and we've already had the IMF, International Monetary Fund, come out and say, hey, a third of the world will be in recession in 2023. The U.S. might escape, but remember that the Fed in December said GDP growth in the U.S. would be 0.5% in 2023. Not a whole lot of positive there. So the IMF is saying maybe the U.S. will scrape through. The optimists on Wall Street are saying 10% gain from here by the end of the year, but they're not saying it's going to be a straight line from here. I think that they would say is probably, well, down and then up, so we wind up with a net 10%. Let's look at a chart of the S&P and we'll see where we are. You notice that we're getting kind of close right now on the 3rd of January, where the index, the S&P, is about 3816. We've got a low back here in October at 35.83, and then we've got a June low at 36. So we're not, what I think we need to do is to either take out these lows, maybe sometime in May, June, or bounce off them sustainably. But right now, I think we're still coming down to these levels. I think these are the levels you want to watch if you're looking at when to invest. 3,800, no. 36, 35, yes, I'd say for putting money in. Again, I think the pattern for 2023 is probably down, finding a bottom in July. I put up a post on both the free site and the paid site that lists sort of 10 big trends for 2023. And from reading that, you can get a sense of why we might be down for the first half of the year before we find some kind of bottom. The news flow is pretty negative for the first 6 months of the year. So keep your powder dry, I think. Look for the second half of the year. Look for a bottom. And then I think we can put some money back to work. Thanks for watching. It's been Jim Juback. Watch my YouTube channel. Subscribe. If you like this video, please give it a thumbs up. If you want more, including that look forward piece, 10 big market moving trends for 2023, you can go to my free site, that's jubackpicks.com, or you can go to my paid site at jubackam.com. You'll find addresses to those both down below.